Stock market investors are waking up to a new reality as President Trump announced major tariff increases with all the trading partners of the United States. The impacts are reverberating across the world as stock valuations are dropping. Alphabet has not been excluded in the stock price declines. The price is falling as a result of increasing uncertainty about macroeconomic responses to the increase in tariffs. Investors are now curious if they should buy Alphabet stock. Even more so because Alphabet is scheduled to announce quarterly earnings results towards the end of April. Investors want to know if they should buy Alphabet before it announces earnings or after. So I'll discuss the impacts of tariffs to Alphabet's business in this video. I'll also share my insights into the decision of buying or selling Alphabet stock before it announces earnings.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Even though Alphabet doesn't sell very many physical products, it's not going to be immune to the impacts of tariffs. A lot of the revenue that Alphabet generates is from advertising, and the businesses that advertise on Alphabet's platform are likely to be impacted by the increase in tariffs. So if they experience a decline in customer spending, they are likely to pull back their advertising spending on Alphabet, and Alphabet's revenues will likely decline from those categories, which are a major component of Alphabet's overall revenue. So Alphabet is going to be indirectly impacted from tariffs, but in a meaningful way. However, it's not all going to be bad news for Alphabet. Alphabet mentioned here that they're confident in the opportunities ahead and they're going to accelerate their progress investing in AI, forecasting $75 billion in capital expenditures in 2025. Now, if there is to be a slowdown in Alphabet's revenue, they're likely going to pull back on this capital expenditure in AI. Also, another benefit to Alphabet's business is one of the bigger risks could be diminished. We've been talking about the reason why Alphabet is selling at such a cheap valuation is because of how quickly it's being disrupted by large language models and other AI services. But if there's increasing economic uncertainty and we approach higher unemployment, a potential recession, those investments in new product categories by these disruptive companies will likely slow down. The investment in these opportunities are always more when economies are doing well and consumer spending is robust. So if there should be disruption and there should be a slowdown in economic activity, the rate at which Alphabet's search business is disrupted will slow down, and that will be a great advantage to Alphabet. It'll give the company more time to adjust to these rising threats to its Google search business, which is a major component of its overall revenue and profitability. So there are some offsetting factors to Alphabet's business as a result of these tariffs, but these are very difficult to adjust to. They're very difficult to quantify. There's so many moving parts. It's going to be on a step-by-step basis. The first step to watch out for is the consumer response to higher prices. Are consumers going to pay the higher prices that businesses will charge? Because businesses will have to charge higher prices because their costs will increase. So how will consumers respond? If consumers keep spending, then everything will likely be muted. The impacts will be less negative than are initially being estimated. In the most recent quarter, which ended December 31st for Alphabet, it delivered robust results. Revenue increased by 12% to $96.5 billion, and its operating margin expanded by 500 basis points to 32%. So Alphabet is entering this period of uncertainty in a position of strength for most of its businesses. While the risks were increasing to its search business, the threats of increasing tariffs and the uncertainty as a result could slow down that risk to its search business. And I've been following the search business really closely ever since the launch of ChatGPT and large language models and how it's impacting the way consumers search. In the most recent quarter, Alphabet's Google search business generated a $6 billion increase, or more than 12%, to $54 billion, up from $48 billion. So while there is a change in the way people are engaging with the questions they're asking and searching for on the internet, so far it's been positive for Alphabet. They've been able to incorporate AI into their search results with the AI overviews, and so far it's looking okay. Even though these large language models and these AI are becoming more and more effective, thereby increasing the risk more and more to Google search, it has yet to be reflected in the company's revenue. But every quarter, investors like myself are watching this number like a hawk to make sure that we're not seeing any significant slowdown in the Google search business. Coming into these announcements, Alphabet stock was already trading at a cheap valuation, and it's become even cheaper. Alphabet's trading at a forward price to earnings of 15. 15. This is the cheapest Alphabet stock has traded for, going all the way back to 2023, and it's rarely been cheaper to buy Alphabet stock. Similarly, when I look at my discounted cash flow model for Alphabet stock, I calculated an intrinsic value per share of $216, and the current market price is $151. So whether I look at it from my DCF or from a multiples basis, Alphabet stock looks cheap. It's actually approaching its 52-week low, which was $147. I wouldn't be surprised if it touches that low in these next few days, given the increased volatility. Alphabet stock is down 3.6% today, while the company's earnings per share have been doing robust increases at $7.72 in the most recent trailing 12-month period. So to answer the question, is Alphabet stock, should you buy Alphabet stock before earnings? I think Alphabet stock is an excellent opportunity right now for long-term investors. I have it rated as one of my top 9 stocks to buy. Whether or not you should buy before or after earnings, I think this is a time to reduce risk. And so even though I feel it is undervalued enough where you can buy it before earnings, I think the current economic environment is more sensitive. And so there are more risks to the downside because of the increased volatility and the increased sensitivity from investors worldwide. So I wouldn't allocate my full purchase before the earnings. So if I was thinking about buying $1,000 of Alphabet stock and trying to decide whether or not I should buy before or after, I would split that up. I would maybe do $500 before and $500 after, or $600 before and $400 after, maybe $750 before and $250 after. But I would definitely make my allocation spread out, more than one purchase decision, because I want to give myself the chance to benefit and buy the stock at a lower price should there be more volatility. But overall, bigger picture, zooming out, I like Alphabet stock a lot at current valuations. I own Alphabet stock myself. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.